Hi everyone, welcome back to our channel. Today we're diving into some major developments in the world of finance and technology. From the UK's new crypto regulations to Alphabet's impressive earnings, we've got a lot to cover. So let's get started. First up, the United Kingdom has unveiled draft legislation aimed at tightening oversight of crypto assets. This move is designed to curb scams and positions the UK as a leader in fintech through international cooperation. Introduced during UK Fintech Week, the legislation will bring crypto exchanges, custodians, and dealers under traditional financial regulations. These new rules will enforce standards for transparency, consumer protection, and operational resilience. This comes in response to a surge in crypto adoption, alongside rising scams and company failures. Plus, the UK is in talks with US officials to create a cross-border sandbox for fintech, allowing for joint oversight of digital products. Switching gears, let's talk about the ongoing trade tensions between the US and China. China is demanding that the US eliminate all tariffs, claiming it's a prerequisite for resolving the trade war. Chinese officials have dismissed reports of ongoing negotiations, labeling them as false news. Despite these tensions, China's industrial profits saw a slight increase of 0.8% in the first quarter, thanks to domestic stimulus. However, economists warn that US tariff hikes could threaten future gains, as exporters face weak demand and fierce competition. Now let's shift our focus to the Federal Reserve, which has softened its stance on cryptocurrency. The central bank has rolled back previous guidance that discouraged banks from engaging in crypto and stablecoin activities. They have rescinded a 2022 directive requiring banks to pre-notify regulations of crypto-related plans and reversed supervisory requirements on stablecoin activities. This signals a more accommodating approach, potentially allowing banks to offer crypto custody and payment services, which could bring greater legitimacy to the crypto industry. In related news, Nasdaq is urging the US Securities and Exchange Commission to provide clearer regulations for cryptocurrency. They have unveiled a 4-tier blueprint aimed at fostering a more structured approach to the crypto market. This initiative seeks to bridge the gap between digital assets and traditional finance, advocating for increased transparency and clearer rules. Nasdaq's proposal outlines a framework for categorizing crypto assets, encouraging institutional participation while addressing security concerns. Finally, let's talk about Alphabet, Google's parent company, which exceeded Wall Street expectations with a first quarter revenue of $90 billion. This impressive figure was driven by double-digit growth in ads, subscriptions, platforms, and devices. CEO Sundar Pichai credited this success to Alphabet's full-stack approach to AI, highlighting the achievements of Gemini 2.5 and AI Overviews. YouTube ads and Google One subscriptions also played a significant role, with paid subscriptions surpassing 270 million. Alphabet's earnings per share jumped by 49%, and they announced a dividend increase along with a $70 billion share repurchase program. Let's take a look at the economic indicators for this week. Consumer confidence slightly below expectations, landing at 86.0 compared to the forecasted 87.7. This modest decline suggests consumers are becoming more cautious, potentially signaling slower spending and weakening economic momentum. Job openings fell to 7.192 million, missing the forecast of 7.490 million. This drop hints at easing demand for labor, which could help cool wage growth. But it may also signal that the labor market is beginning to soften. Private employment growth saw a sharp slowdown, with just 62,000 jobs added, well below the forecast of 114,000. This substantial miss points to weakening job creation, which could weigh on both consumer spending and broader economic growth. Instead of the modest 0.2% growth expected, the economy contracted by 0.3%. This unexpected downturn raises serious concerns about economic momentum and could spark renewed talks of recession risk. Core inflation came in at 2.6%, matching expectations and easing from 3.0% the previous month. While this doesn't mark a major drop, it may give the Federal Reserve some breathing room on interest rates. On a monthly basis, prices remained flat, coming in at 0.0%. This could be an early sign that disinflation is taking hold, supportive of a more dovish monetary stance. Crude oil inventories dropped by nearly 2.7 million barrels, defying expectations for a slight increase. This significant drawdown could reflect shifts in demand of production and may influence short-term energy prices. Initial jobless claims rose to 241,000, above the projected 224,000. Though not a dramatic spike, the increase suggests some softening in the labor market. S&P Global Manufacturing PMI held steady at 50.2, just below the forecast of 50.7. This points to consistent, though subdued, activity in the manufacturing sector. ISM Manufacturing PMI registered 48.7, slightly under the prior month and below expectations. This reading signals continued contraction in manufacturing, reinforcing concerns about slowing economic growth. ISM manufacturing prices held steady at 69.8, showing only a slight increase from last month. This suggests that input cost pressures are beginning to stabilize, a potentially positive sign for corporate margins. Average hourly earnings grew by 0.2%, just under the 0.3% forecast. This stable growth reflects a balanced labor market, neither overheating nor weakening significantly. The economy added 177,000 jobs, comfortably beating expectations of 138,000. This strong result shows continued resilience in the labor market, which could help sustain consumer demand. The unemployment rate held steady at 4.2%, right in line with forecasts. This consistency suggests ongoing labor market stability, helping to anchor broader economic confidence. Next week, market attention will be focused on key economic indicators and earnings reports, including S&P Global Services PMI, 10-year note auction, Fed interest rate decision, crude oil inventories, and ISM non-manufacturing PMI. Meanwhile, several major corporations are set to release their earnings reports, including Palantir Technologies, Vertex Pharmaceuticals, Advanced Micro Devices, Arista Networks, Ball Corporation, Uber Technologies, The Walt Disney Company, Unity Software, Shopify, and Coinbase Global. That's a wrap on today's news, with signs of both resilience and slowdown across jobs, inflation, and growth. Where do you think the economy is really headed in the next few months? Let us know in the comments below. Don't forget to like, subscribe, and hit that notification bell for more updates. Thanks for watching, and we'll see you next time.